All right. Good morning. Good morning. Good morning. Good morning. Good morning. Uh, good Saturday morning. It is August the 24th. It's about 10:50 a.m. Just want to go ahead and get basically the weekly recap and weekly outlook done early. I'm actually gonna do something that you're gonna go, he's doing what? I'm actually just kill the music this week. Couple of things like right off the top, kind of want to get into before we get into um, recap, overview, forecast, and all of the rest of that stuff. So, um, I did make mention somewhere. I think on the community tab, I was going to start trading my XFA live. I was going to take all of those trades live. Um, da 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 da. Right. Yeah. Right. So I ended up starting my XFA. Trading that account on Thursday night Asia, which technically would have been Friday. So couple of things just within the process, and it has nothing to do with not wanting to show my executions, not wanting to show red days. I think anybody that's tuned into any of my videos to any degree kind of understand that I don't have a problem expressing, showing red days, telling you when I become barbecue chicken, showing you when I've lost, showing you when, hey, it's been a down day, right? I've had all of those posts. So it's not about that. I came to the conclusion that it's probably just not for you. And here's what I mean by that. What I do on the charts, how I take positions, what I'm looking for, I've said from the very outset is really like it's a personal journey. A lot of times I do these outlooks, I do the other videos just for informational purposes, and again to talk to somebody out there that is me, was me, and didn't have a clue, to somebody to just speak plainly to them. So the more I started diving into that while I was sitting in a position Thursday night in Asia, literally, and I kid you not, I was sitting in a position that I took off of the nine p.m. Eastern, which I typically use like as a power of three. I'm sitting in that position, and the crazy thing is, I knew that there was news. I knew that there were things that were instrumental in price that were about to occur, especially with Powell speaking and the at the hole. So a lot of stuff was going on. And how do I know that? Because that 9 p.m. position that typically you can get in and out of when it's just very bare bones, or it's just like the technicals outweigh any kind of sentiment or fundamental. Like on those days, that 9 p.m. trade at the very latest, you'd be out at like maybe 10:22, 10:30, something like that, right? This position, however, lasted almost until 12:30. So like to say, like we're up on the account. So first day, technically, like I said, Asia would be Friday session. It would be next day session. So even though it's Thursday night, it's actually counting towards Friday's executions. So we ended up green. So very very small, shallow. Three clap for being up. So the XFA cherry is popped, and we're on the way. Not a massive day, but it's a green day. Double digits, not triple, not single, and not red. So all in all, good day. But going back, while I had this fair amount of time to kind of just sit, wait, and see how this was going to deliver, like I said, I came to the conclusion that, hey, listen, you know what? If I talk you through some things, or I talk to the person that was kind of like me, if I'm talking you through it, then you see what I'm doing. I'm trying to debate. Well, I'm not trying, but basically, it could be construed as these are the things that I didn't have. This is what I'm sharing with you. This is what works. This is what I'm doing. And then the next thing I know, I have somebody that's either in the comments or that's going to email me and say, "Hey, listen, how much would you charge me to show me what you're doing? I see it on your charts. I'm not 100% aware of like what you're looking at, what those levels are, blah 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 blah. Hey, how much do you charge?" I don't want to get into that. So I thought about that, and I'm like, okay, I'm looking at the extreme end of the spectrum, where there's a following and a gaggle of people that come in like, hey, I want to learn. So yeah, I'm not saying that I'm not. I'm just looking at what is that potential. What does that look like? So the more I thought about it, I said, you know what? if it can't just be information that you scan through and then you move on, then it's better that I just do weekly basis uh, trade concepts, ideas, things that I see. Maybe, I don't necessarily like the whole day in a life thing. That doesn't really. That's not my. That's not really in my character. That's not something like I don't have an ego trip, and I don't have ego issues, and I don't have self esteem issues. So I don't really need to do that kind of stuff. Every once in a while, I get a wild hair where I'm like, hey, I want to share and show. Hence why the channel, the documentation of the journey. So I will still record my sessions. I'm just not going to upload those to YouTube because, again, what do you really need them for, right? And the biggest perpetrator of whether it be good or bad criticism is really going to be me. So not necessarily looking to add critics to the lineup. So long and the short, I may still, do like a weekend crypto something just for kicks and giggles. But the one thing for absolute certain is we will still do weekly recap and weekly outlook videos. So that is a guarantee. So right there, I'm pretty much telling you, you're guaranteed to get at least one video a week from me. That's etched in stone. Like I don't ever foresee like not doing these because I actually enjoy it. And even within the weekly recap and the outlook videos, I'm still gonna give you a little bit of something, which based on, I'm gonna call it an aha moment. I really am, because my eyes got open to something after, looking back over the week. I typically do that. Now I didn't do it before. I used to say, oh, the weekend's here, I'm done with the charts, and then come back Saturday and then into Sunday looking for the following week. Well, I actually just recapped the week, and yeah, I had a little bit of an aha moment, and I'm just kind of gathering data on that perspective. So without further, let's kind of get into let's get into this week. So this is the 4 hour. Let's go out to the weekly really quickly. And so this candle I can actually document, and you'll be able to see everything. Holy schnickleback. Schnickleback. Not nickelback, schnickleback. Um oh yeah, I was right on. Spot on. All right, so this ray would indicate like this was last week's candle. And then right, yeah, let's change that color real quick so we can differentiate the two. We'll just make that blue. All right, so blue is opening week. Did I put the template in here? I think I did. Look at that. Good job. Be proud of it. All right, so we're gonna kind of go back in time just a little bit. So here's our weekly candle. So this is the weekly open. This is the previous week's high. So if you notice, obviously we open inside previous week, inside. So now let's drop down to the 4. I'm not going to take you through like the entire week because we did have news and other things that were going on. However, there were some other things at play. Okay, so here is, we're back at the weekly opening is here. So basically from just looking at this, and you can already see that the same ray for the previous week's high is literally where, that's our 4 hour liquidity high. So that's literally what that is. If you look back a little bit, so is this. And in this level, I annotated on the other chart, but I wasn't sure. Okay, and I will say that right now. So we'll just go ahead and just put this in, and I'll label this one as the buy side liquidity. All right, we'll just label that as a 4 hour buy side liquidity. And let me increase that text size so you can see. I think I have to do them. Yeah, I have to do them at like 48 so you can actually see. All right, so we're gonna just set that as the 4 hour buy side. And I know you could say hindsight, oh well, look, it ran through. Yeah, shut up. Shut up. All right, Opening again, we're going to look back here and then we pick out our 4 hour sell side, which, as you may or may not be able to tell just from looking, we didn't get to, but we're getting to it. All right. So this is the range as it was presented to us last Sunday. Okay. This is where we were. Now, interestingly enough, it looked like, just based on how the week opened, all right, so we rallied up. Then the next candle, the next 4 hour candle printed at 10 p.m. Sunday night. And it took out this initial buy side liquidity sitting here. So, one under reasonable expectation would say, okay, well, we've swept this buy side. So, yeah, we're absolutely tanking to take this out. Well, the one thing that's not showing here, and I would just challenge you to kind of go back into your charts and look at, or you can go back into last week's weekly recap and outlook video on NQ. So last week, you'll notice that I actually had two levels of buy side liquidity listed. And the second level was this level. So we were going into this week here, and then I said, you know what? I wouldn't be surprised if we get a small rally, maybe a move back down, and then we pop back up. But my expectation was we're going to take out the immediate 4 hour buy side. We're going to come back, trade back inside, and then we're going to rally back. I was thinking we were going to take this 4 hour buy side, the higher level of liquidity, and then drop all the way back down. That did not happen, as we can see here. All right. For a couple of reasons, and I think one of them was the fact that we did have jobs data this week, which I don't want to use the technical term, but we'll say like it looked like, the movement of the market was inversely correlated to the data itself. So it just seemed like it was a little bit off, but things being what they were. And also there was a quote unquote special guest speaker. What's the guy's name? And this is his last year as part of the Fed. I think either he gets a promotion next year or he just kind of goes away. I cannot remember the dude's name, but basically he stepped up and said a few words that was, I would say, not his message wasn't spooky. The fact that you're popping up during a time of relative volatility to inject some more volatility to whether or not what you're saying is true or it's not, but spooking the market in one way or another, so to speak. So you had that kind of talk. I'm not saying that caused this. Jerome caused quite a bit, as we can see, but all in all, the market stayed long a little bit longer than I had originally had anticipated. So this obviously last week, but again, buy sides cleared out. We did rally back inside. I would take it to the 15. It's not really a need per se. It'll be a little bit quicker, and I think just to keep everybody on the 4 hours probably going to be better. I'm going to try not to dirty this chart up like I dirtied the last one up. I'm going to the John Madden chart drawing school of reform, trying to get better. All right, so here obviously you've got a little bit of a price void. You've got a little bit of a gap in here. The void is realistically from here to here, where there's no price delivery at all. There's a gap in price or a void. I literally just took it from body to body to try to measure. We actually had like this wick clear high that just took out basically, stayed within the confines of this still being a fair value gap. So that's one thing that, again, like I said, going back and looking, like to mark this area out, could have very simply done something like this, right? And then what does this become? Well, it becomes a fair value gap, and somebody would say, well, how in the hell do you do that? Like, why would you mark that out to be a fair value gap? One, two, there's still three candles. There's still three candles that make up a fair value gap. But because of the fact that we had some level of void in here, or there was no delivery of price, whether it be fairly or adequately, there wasn't adequate delivery here. So this is going to have to get filled back in. The overall structural intent is this is still a fair value gap. It's just got some funky kind of stuff going on in here with the price void or this gap. So you could treat it as such. And if you're treating it as such, even though this portion gets taken out, this high does not. This is the third candle in this three candle string of one down closed. The other aspect, and you could say it's hindsight, which is fine. I really don't care at this point. This could have been consideration for maybe looking at it from a breaker standpoint, because you do have liquidity that was taken. So that could have been another way that you could have looked and tried to measure out and say, okay, how far can or should it go? Or if you didn't want to put your stop above here on a lower time frame, like what was going to be your tolerance? So that would have been one thing. Just basically taking these last two up close candles. Here is your liquidity, right? And you could have taken the liquidity candle. Let me do that and show you that way too. There are two ways that you could do that. You could do it the first way. You could use the last two up close, or you can sometimes do it this way. And this one gives you a little bit better RR, and it also allows you to look at mean threshold or consummate encroachment, where you've got just the wick closure. So a lot of times you can label that and mark that out, especially if you have liquidity that's been taken. Okay. So again, just a little tip, something for you to test out, play with, see how that works, and see how that mitigates. So that was ultimately the reason for coming all the way up here. The addition of this being a previously low that was run. So you had orders that were going to be resting. There was some mitigation. There was obviously an inefficiency in price that was sitting up here. So now that that's all, kind of like done, but not completely done. And I do mean not completely done. What we're going to do is we're going to pull this over here for a second. And last week I kind of took you through a lot of like the structural intent and structural delivery. I'm going to try not to do that this week because we just did it last week. I just want to immediately point your eyes to something that we were doing last week. I'm going to point your eyes to it one more time. Okay. This is a low. This is a high. This is a lower low. I know this is a 4 hour. Just think of it fractally, but understand low, high, lower low. So the intention of price, dependent upon what the composite operator is looking to take, what they are looking to mitigate, what they're looking to balance, what they're looking to run, depending on where this forms, may give you a huge freaking sign as to what the next target is. So here's a little snidbit of advice, okay? And that's why this video doesn't have to be 40 minutes or an hour long. It could be if I want it to be, but not really. So here's the difference. We didn't take the sell side liquidity. We took buy side from the initial run. We also took the buy side that was a little bit higher than that. We tapped into an inefficiency that's up here, okay? The inefficiency in price delivery. We also have basically what could be viewed as a breaker or mitigation. Tapped in, we've run short. So just looking at, again, current structure as it was delivered. Current structure as it delivered. Is this a break of structure? Yeah, you could say. That's a clear low, but it's also a clear high. Do you see this? This can be a high. That wick lower than this wick body This wick lower than that, high. This wick here is a short-term low. This is also a low. So not relatively equal, but a couple of videos ago I told you about basically lows and highs sitting inside of an area of fair value, which are what? Easy targets. So that would have been a target. He had another fair value gap down here. Okay, another low. After sweeping out these lows, it makes this low in this fair value gap. Very next candle does what? Takes it out. Okay. Again, you can call it hindsight, but at the same time, not necessarily hindsight. Just go back a couple of videos. You can go back a couple of weekly bias and outlook videos. I'm talking about it there. So there you go. So this week coming up, okay, we've talked about structural delivery. And even though this is cleared, it doesn't invalidate the fact that this is a low. So I know that somebody will be in the comments saying, well, how is it a low if the liquidity's been taken? Because it's still a low. It's still a structural point for you to be able to reference. That's why. So this is still a low. That's still a high. This is still a lower low in relationship to this structural price delivery. Okay. Now that that's out of the way, what am I looking for this upcoming week? Well, actually, before I draw that out, let's talk about one more thing about last week, and then we'll talk about what I'm looking at. So last week, obviously, we closed inside. This was basically a buy side liquidity, right? Which means what? This is external range liquidity. The 4-hour buy side above that was also what? External range liquidity. So as price rallied, it took out external range liquidity, made this high, and once it made this high, would it continue higher? It depends on if it was seeking some other efficiency or to pair off orders and then look to reverse to run other inefficiency, other price discrepancy or price delivery that was not efficiently delivered. So we made this high. So once we make this high, what now are we looking for? Now you'd be looking for internal range liquidity. So this is one point of internal range. This is another point of internal range. So it cleared out external range liquidity at two different levels, made its high, okay? Or if you wanted to say ran out external range liquidity, created an internal range within fair value, okay? Made another run above external range liquidity, created another because this got ahead of myself. This wick fractally on another time frame is another fair value gap. There's something there. There's one or maybe two fair value gaps inside this wick. Okay, so fractally, it did create another low inside a fair value gap. One moment, because I know that I can say something, and this happens a lot. I know I'm at 23 minutes. You're like, fool, you said you weren't going to take. Calm down. You know me miss me, baby. You know you'll miss me. Hello, Moto. All right. So it's probably on the 5-minute. I'm trying to get them both in the same in view. Yeah. So boop boop boop. All right. So here is your 5-minute fair value. This is your fair value gap right here. That's the wick clear because this was basically that low. Okay. Now what I'm gonna do is everybody can see, right? You can see that this is below, right? That's your fair value. Now I'm just gonna move over here for the naysayers. All right. I'm zooming all the way in. You'd be like, we can't see it. You can see it now. 1, 2, 3. Candle wick low, candle wick high. That's your fair value. Now, if you want to be real nitpicky, you could say, okay, that is fair value. Yes? We all agree that that's fair value? Okay, great. You hear supply and demand or S&D areas or S&D zones? Those that like order blocks, you might love this one. So you could consider this was the low, okay? I'm not going to take you through a structure. We'll just say that this is the low here, okay? So move back in. You can say this is basically creating a low, but it's also an order block that gets tapped back into. It moves away, but kind of. So you could call this an order block 2.0, whatever. But this is basically an order block formed off of an order block to help change the state of delivery. This is an immediate tap back into the top, but it also becomes a support reference if need be in the future. Or it becomes a mitigation point in the future if you ever need to return to this area for whatever the reasoning. So in this case, good grief, I pulled it that far away. We revisit it almost to the mean threshold or to consummate encroachment, almost to the 50%. Okay. So if you needed proof, or if somebody was like, this guy's talking out the side of his fucking neck, he doesn't know what he's talking about, there you go. Okay. So I'm not saying hopefully that shushes the naysayers. It won't. People are still going to think what they want, and that's fine, which is, again, just to recap at the top and at the outset, this is one of the reasons why I'm kind of just going to do my own thing and still do weekly biases, because like I said, I enjoy it. I enjoy sharing, a little 3-5 minutes of where's let's get rid of that. My little 5 minutes of information that I could share with you. Why won't you delete? There you go. Okay. Calm down. All right. And get that up out of there. All right. So basically we ran external range, internal range liquidity. So it's creating this internal range liquidity, right? Comes down, clears, stops, and then it's like, okay, so what are we looking for? Well, you can look at the 10 a.m. candle from Thursday. And what is this now? Before we get to 2 p.m., what is this? This is actually going to be a low. It will initially just look like, okay, we ran liquidity, but what is it? At its infancy, fractally, it's a low. Okay, even though we don't have another candle over here on a 4-hour. Fractally, lower time frame is going to kind of show you the wick now. And I will say, yeah, you could call it hindsight, call it what you want, but this kind of demonstrates to you that, yeah, there's a tug of war that was going on here, but this was invariably going to be a low because you've ran sell side liquidity. You basically created an internal range structure. So this wick is that's why I'm calling it a low, because you've got sell side liquidity. It's going to rest below that wick, right? So it pushes, it pulls back up, it closes. Once it closes, the wick, again, I just told you, so the people that trade supply and demand or whatever you want to call it, okay, within this wick, You're going to get that zone. If the zone does not hold, what did it just do? You've taken internal range liquidity. So it's creating the internal range liquidity here. 2 p.m. candle opens, clears it. So now what have you done? You've essentially cleared internal range liquidity. You just ran it here. You ran it, you took it all the way down, and then you just made another internal liquidity point. But we do what? Internal to external, external to internal. That's always the flow. All right, regardless to how far it runs, how slow it moves, whatever. It's always internal to external. Right? It's a little more than that, but in its most simplest form. So you ran the internal, then you created it, then you ran the internal. So what's the very next thing? You want to do what? You're looking for external range liquidity. Well, the only place that you're going to really be able to achieve external range liquidity is to create intermediary highs that are going to have to be run, intermediary lows, which are also going to have to be run for you to be able to truly take the external range liquidity of this candle, because right now we're operating on the pretense of just this 10 a.m. Thursday candle. Okay? We're starting here. The ultimate pretense is going to be the 6 a.m. because there is also, this is the extreme end of our external range run. This is going to be external range liquidity just within this delivery of price, this structural portion here. The overall is up here. Why is that important? Because coming into this week, the only thing we have left to run is sell side liquidity. Okay? So we now have basically, if you want to call a pile in or a buildup of orders down there, we have a pile up and a buildup of orders. So this week, this current week, oh, good grief. Back to the ray. This week we're looking for some more buy side liquidity because this is our 4-hour high. So this is going to be current week. And this is going to be our sell side liquidity current week. Now, the only thing that is evident and very clear is that this buy side liquidity already been swept. Right? So essentially, I can get rid of this and we'll take these off to where things will make a little bit more sense. They won't be as confusing. I don't want to confuse you guys. Not my intent here. So this is last week's weekly candle. That can also come off. This liquidity cleared. That can come off. So we don't have to worry about that. Okay? I just wanted to be able to give you a point of reference. So realistically, when you come into your charts, if you're trading NQ this week, what might you be looking for? I'll tell you what I'm looking for. Have no problem sharing that. As I said, we still have sell side liquidity sitting down here. However, low, high, lower, low. So my supposition is simply this. Again, I'm not a market maker. I'm not the composite operator. I would honestly be looking for something like this. This week, I'll move in, I'll move back up, another move like this maybe, come back in, piddle around, another clear, and then eventually a run. I'm looking for the buy side liquidity to be taken from Thursday. Once that happens, in whatever fashion, I'm looking basically for this to reverse. But with the catch. Now I know you're probably looking at this like, what the hell? You're back to your John Madden shit. You're back to your John Madden. Why wouldn't it just run? So I have the idea that this week coming up, you should be looking for the 4 hour external range liquidity or the 4 hour buy side liquidity to be taken based on just the structural narrative. I'm just looking at price action and how it's delivering. Obviously, we know things can change during the week. Sentiment, fundamentals, whatever you want to call it, can be added to confuse or change confluence and biases. That is what I would be looking for until this gets cleared. Okay? And here's the thing. Here's the interesting part about this. Even if this sell side liquidity gets taken, I might, for a split second, have to just sit on my hands because this is an interterm high as it stands right now. So could the market reprice lower? Yes. Could it reprice lower before coming up here? Yes, it can. It absolutely can. Due to the nature that this sell side liquidity didn't get taken and this is the current week. So is it possible this kind of comes all the way down and takes this out? It does. It's possible. I don't see that happening, but it is possible because then that would make this a clearly defined low. It'd make this a clearly defined high. And this would be wherever it ends up down here, a lower low, which if we look back over here, what's sitting in here? That's another fair value gap. Well, what was sitting here? Fair value gap. And what did this do? Cleared into a fair value gap. It piddled around. Then it ran. So you can call me a copycat, but it's like price shows you. A lot of times it'll show you. If you take just like, sometimes you have to look at the 35,000 feet view. So when you zoom in, keep that image of what that looked like at 35,000 feet and then just zoom in, take it to a fractal level. So yeah, that is the one or the two things. So yeah, I said that's a possibility, but there and again, my bias is this 4 hour buy side. Once that's done, I think we move around in here. It's the last week in August. You'll have like some settlement and contracts and options expire typically on the last week. So that's something to look out for. So other than that, that's the video. Appreciate you guys' time. Thanks again. Any comments, questions, leave them in the comments below. I'll respond to any and everybody. Any questions or anything else, you can email me. There's an email in the description. And yeah, like, comment, subscribe. All right. All right. Be safe. Have a good weekend. Get some rest. Relax. Watch the race. Go to the beach. Stay safe. Don't do dumb shit. And see you guys next week. Later.